welcome to the first video of 2025. Happy New Year! Its title is When There is Blood in the Streets. That's a question mark applicable to equities. So let's dive into the clues that the market is offering us. Thank you for liking this video, subscribing to the channel and turning notifications on so that you don't miss a thing, because these videos are connected with each other, and the same goes for articles bringing you extra perspectives on my site. Let's start with the yields chart. You can see that the short end of the curve is not distinctly rising, whereas the long end of the curve is having trouble crawling higher as well. Monday's red long candle, that's the consequence of Chicago PMI undershoot, but that's a regional survey, so I would not be reading into it that much as markets did, because in my opinion yields will continue marching higher and will overcome the 5% mark during the first quarter. But of course, late Santa rally, it was kind of rejected, fizzling out. Clues were there, including in cryptos. So the next phase of yields ascent has to wait a little. Let's get into the second chart, which concerns the US dollar. Here we see a more steady in upswing mode looking chart, and it's about more than rising yields in the US as compared with the rest of the world, whether you look at emerging markets or the second ticker concerns Chinese bonds. So here I see that the original goal, first target of 108, had been already overcome, and we are marching towards 112, 113. Does this mean that it would keep sinking stocks? Not necessarily so, because both can move in tandem, because as with bonds, as with treasuries, I mean, the US can become, and has become, and is in the process of becoming the best game in town. Meaning, international money is flowing to the States. You should remember this slide that is coming from Saturday, December 21st, long half an hour presentation, where I had been diving into why these rising yields in the US are pointing to upcoming acceleration of economic growth and inflation, including in inflation expectations ahead, why it's not the same kind of setup as stagflationary 1970s. So please do yourself a favor and refresh yourself with that long video, where I'm in the opening section of it explaining all these bullet points and what that means, because we will see them updated in the following part of this presentation. So proceed with this update and then rewind to this section of the December 21st presentation, please. Next, we see the view of US bond market, where the risk on mode is still quite easily discernible. So, and that means that no major S&P 500 or Nasdaq top has been made, even if we are seeing quite a few discrepancies, questionable leadership, but semiconductors are starting to wake up, and Nvidia did quite well lately in its standalone session when compared to Nasdaq itself. In one sentence, there is still risk on under the hood when it comes to the bond market, and stocks will get it. So let's revisit or visit, first of all, a little preview of what I will be presenting to premium clients tomorrow, and it will be this chart, which had quite some intraday opportunity to put in a bottom on December 31st. However, before New York lunchtime, it was apparent that it would not be happening and that any lower knot developing would be quite questionable and relatively short, meaning that probably we are not yet at the very bottom, even if I see the percentage of stocks trading above 50-day moving average curling up, the equal weighted S&P 500 or even Russell 2000 putting in some encouraging daily session yesterday. It's not yet conclusive, and I do think that we are facing a few short days more of some pain, and putting in a long lower knot coupled with intraday rebound to the upside, which is what would be marking the bottom. But on various time frames we are not yet enough oversold, and this ES 5930 level will be broken to the downside with greater decisiveness than with which it was nibbled at yesterday. A few closing slides helping you select what would be of greatest interest and greatest fit to your trading style and markets. Selected, you know pretty well my professional journey and that I'm always here for you, whether on Twitter, Telegram or YouTube. Thanks again for liking. Happy New Year, obligatory disclaimer, and talk soon again.